Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. This is Blockhead Traders for the week of December 7th, 2025. And in this week's episode, it's December. Is the Santa rally coming? And also, we're going to give a little bit of update on some of the trading strategies and how things are going for myself and Viper. And we're going to kind of look at trading in the flow. But before we hop to that, I want to give a shout out to the Discord, a link in the description below. You can hop in there, say hello to myself, Viper, some of the other Blockhead traders. Love to hear what you're trading. Love to hear what type of content you want to hear about. Also, you'll find a link to thetagang.com/sprocket888 as well as /viperxl007, where we post each and every one of our equity trades, the good, the bad, and the ugly. Last, this is available in an audio-only format wherever you get your podcast, so look us up, subscribe, and if you can't find it there, let us know and we will get it there. But let's hop to this week's content. Viper, the rally, has it begun? I know that we had quite a drawdown there in November, kind of heading up before the week of the holiday season here in the U.S. of Thanksgiving. And then kind of entering that holiday week, I don't know, volumes got a little bit thinner. The market started picking back up. And then kind of the momentum's been building there in the market. In this past week, we just got some of the first glimpses of data from the private ADP stuff. And that particular day, they were actually quite abysmal. I think the market was expecting somewhere like the addition of 40,000 or 45,000 jobs on the private ADP payroll information. But in reality, they saw something like a shedding of 35,000, 38,000 jobs. So really far off. And you might think, oh my gosh, that would have kind of thwacked the market to really show that labor is kind of weakening. But it had almost the opposite effect. It was almost a catalyst to the market. I think it was more in the hopes of, now the Fed doesn't have to worry so much about a strong labor market as well as, sticky inflation, because once that labor kind of starts ticking down, then they can stimulate growth or things like that. And so I think it was maybe a further validation of the potential probability of a future rate cut here this week. This was a Fed week, the last Fed week of the year, where they'll come out with their rate setting Wednesday, I think it is, of this week. But, it kind of interestingly timing as it always is. And I think we always kind of give that, is Santa coming this year question. And right now, it kind of looks like there's quite a bit of momentum building as we kind of go into year end. I personally am still skeptical of all of these rallies that keep coming. I think when you look at the price chart, I don't know, that might be a good thing to take a quick gander at today after the rally most recently. If we're making new all-time highs or if we're kind of rejecting off of them like we kind of have been a couple of recent touches, to see are we going to break out further, or is this potentially going to kind of be the little ceiling and we'll kind of decline from there. Viper, I don't know how closely you've been kind of following the markets or where you are. I think my bias has lately been cautiously bullish, but I've been leaning a lot more on the bear camp. But do you have an insight on what your thoughts are?
Yeah. So, generally speaking, I think I agree with you on the high caution. My general read has certainly been, like I mentioned previously on previous episodes, I've definitely been taking in, I guess some people would call it doom and gloom. So that's an important context. But it's not like I'm taking in this content on YouTube or whatever that's just like, it's all going to zero. Like, as I hope both of us have shown the reputation on the show of thoughtful, intelligent exploration of ideas, I think would be the fancy schmancy way to say how I feel like I'm approaching this. So I'm absorbing information about the greater mechanics of market cycles, and we've talked about that a little bit in the past. And so, yeah, there are a lot of fundamental warning signs that are blinking all over the board. Now, what I'm also learning very heavily is these are two very separate ideas. And I guess this is a good little tangent for the beginner trader, or really for any trader, is you're going to get this information. You're going to get this data, as you just cast a net into the social sphere. And you're going to get these interesting data points of like all of these economic signs that are flashing danger, 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 danger. But at the same exact time, if you're trading, the market immediately and very short term doesn't necessarily care about all that stuff. And if you get these signals crossed, boy, are you in for a bumpy ride, because you're going to be like, oh, everything's red. It's flashing across the board. I'm going to short everything. And then the market's like, it's like, I got another weak pump in me. And then boom, it goes up and it's just bad news bears. So I am very actively trying to separate these ideas of the information consumption and what is the chart immediately telling me for the next immediate move. And that's really important to get separated. But on the big macro level, definitely agree with you on concern. But if the market's still going to do what it's going to do, then I'm going to keep following it. But I am very rapidly sensitive and preparing for what you just said, like a lower high, a failed break at all-time high, and starting to keep more, not a ton of cash reserves, but definitely focusing on, having slowly building that up so that way I'm not caught off by surprise, but I'm still in it and I'm still exposed, but getting a little weary for sure.
Yeah, Viper, one of the aspects of this that it kind of makes me think of a parallel is, I've kind of been short the market for a lot of times, like not heavily short, but a little bit more short than long. And it kind of wasn't going so well for me. I had a pretty serious drawdown going on my account, and maybe a week or so before the holiday, we did finally get a pretty significant pullback. Not quite correction territory, but approaching it. It was around 5 to 8%, I think, on some of the indexes. But that was kind of enough where I started packing up some of my shorts that I had, or at least raw direct shorts. But I feel like the parallel here is, I don't know if it's ever happened to you, but I know it's happened to me and my family and stuff. We've gone on vacation somewhere and you're in a hotel and, you're getting ready to go to bed. You got your pajamas on and the fire alarm goes off. And you kind of get out and you're like, the fire alarm's going off, and you're looking around, you had a smell. And no, I don't smell any smoke. And you kind of look out your door and be like, well, is anybody else leaving? What's going on? And I almost feel like that's kind of where some of the market is at, and where it happens a lot is you get all these warning signs, which are, everyone's like, oh, this is a textbook warning sign of this. This is a textbook this, but nobody else is panicking. Nobody else is leaving the party. Well, I don't want to leave the party yet. And it's almost this game of chicken, because if you ever do stick your head out of your hotel room and you do smell smoke or you do see fire, like that's going to be mass panic, mass exodus. And I almost feel like that's kind of what it always feels like when you kind of approach a top to a market before a big correction, or everything is like everybody gets a little flinchy, but they're like, well, let's just wait till the next guy goes. I don't know if that strikes you as something that's kind of going on, but that's the vibe I'm picking up right now.
Yeah, I mean, I'd say that is exactly how I'm feeling, and I'm finding myself not falling completely, but being tempted to fall into that camp of like, nah, it's fine, like let's keep going. And now, for the first time, like I'm being much more cognizant and aware of that. By the time it's too late. By the time you realize it, by the time everybody realizes it, to your analogy, it's too late. Everybody's just mass panicking, rushing for the door and all that kind of stuff. So It's a fine line, and honestly, it's not something that can be taught if we're being honest. And so it really speaks to what we always say about skin in the game, but do it responsibly, because you have to feel these things for yourself, and just get through it as grounded as possible. So, to your point, though, real quick, I wanted to jump over to the SPY and just kind of show a little bit of what you were talking about, but also why, I don't know. So, real quick, we are, like you said, approaching a potential lower high. Like, we have this all-time high back here, and we failed. And when we failed, we made a new low. However, this low wasn't quite a full break of the trend. And so we are currently coming back up to tap this level one more time, which makes it specifically interesting. And certainly, maybe by the time this video goes live, there's a little bit of a different picture here, where maybe we broke to new all-time high, or we've gotten another rejection and a lower low is in the cards. But it is definitely not as clear as we've had in the past. Going back here to just this year, we had a little bit of a pretty steep correction that honestly had all the markings of kicking off a much longer bear downtrend. So this was back February through April, where we made an all-time high. We failed to push much past it. Then we started putting in these lower lows, lower highs, and we just started going down. And most notably in this period, if I jump real quick to the weekly, this actually broke a lot of the trend as we were going up. So this very much this is what the kickoff could look like. However, when we came rushing back up here, where we would have failed here to then continue down further lower, we broke right through. We marched right on up. And so that is kind of where we're at again, where new higher high, or new all-time high, and we've broken down. But on the weekly, it doesn't look too terrible. So it's definitely, trying not to get too panicky, but acknowledging, like I said, a lot of those bigger macroeconomic forces that do make sense, that the party can't go on forever.
Yeah, that is true. The markets don't seem to go up forever, but they also don't go down forever. So it's always that nice, delicate balance. And I've been out there kind of chipping away at the strategy that I've been sticking to that strategy, selling the options, taking assignment. I've taken assignments, a couple of these things blown to the upside. So I've kind of taken assignment short. And the rallies have kind of continued. So I've felt quite a bit of pressure on some of those names, which is contributing to some of the big drawdowns on my account right now. But a lot of those names have really started to kind of come back in for periods of time. And I've taken advantage of that time when it's kind of come back in to kind of close out for a wash or a smaller loss. And some of those have actually kind of panned out to be pretty decent winners. But nothing really special. I've been if you've been tracking some of the recent episodes, kind of gone through some of those trades with you guys. But Viper, I haven't really heard much from you and some of the trading that you've been up to, or the strategies that you've been kind of deploying. Are you still sticking with them? Are you finding stuff new? What's been going on your side?
So two updates that I thought were interesting to bring to the table here. One, so I mentioned many episodes ago an option strategy that I was using, which was a momentum skew strategy. I think I walked through it a little bit on the show, so certainly you can go back and look for that episode. But that, and specifically in multiple episodes, I said this thing is supposed to not have such a crazy high win rate. I specifically said it's expected because the risk to reward is so in your favor. It was an average of like 8-to-1 risk to reward ratio. So it was supposed to have around a 40% win rate. And when I was doing it, it was up to 70 to 75% win rate, if I recall right. So I did specifically call out on the show of like, this is not supposed to happen, and I am not getting comfortable to expect this to continue. And sure enough, it did not continue. So, what ended up happening, and some of this was because in the name, it's a momentum strategy. So it does work in both directions. It'll work in an up market, it'll work in a down market. But momentum is the key. And I did notice, so this was the recent drawdown that we had a couple months back. We talked about it on the show, and I felt it coming of like, this is red hot. And again, like I said, this strategy shouldn't be working this good. And so I had the feeling of like, this was things were going to start to correct. And sure enough, they did. And so a lot of open positions I had crashed out, defined risk. So no issues on the portfolio position, amount allocation and whatnot. But I ended up taking a lot of a lot of losses, which negated a lot of the profits that were above and beyond what should be expected. And then what I started to notice was, as the market was shifting and bobbling a little bit, that's the one time that this strategy doesn't really work, because it needs that momentum. And so I was still, the screener that I used was still flagging positions that had momentum, but I did notice the quality of the tickers was significantly degrading, to just fairly illiquid. Even for buying calls, like, it was just not great at all. There were hardly any big names popping up because everything started chopping. And so I just kind of acknowledged, cool, I'm not going to force this. We're going to put this on hold and wait. And I'm still watching the ticker, still watching the screening and whatnot. And big names are starting to pop back up, so I might get back into that soon. But that was kind of an identification of understanding the mechanics of the strategy and acknowledging when the strategy is not at its best. And so just pausing it, not chasing the trades, and just let it sort itself out. And then we'll get back to it before too long, I'm sure, especially if we take a dive.
Yeah, I could definitely see that. And, I think that is probably a very probabilistic thing that you have to keep in mind, what's the right tool for the job. And I think that's why kind of exploring different strategies and understanding what environment do they work well in and what environment do they not work well in. For example, on my side, when I sell strangles, a lot of times that works the best when volatility is extremely overstated. But when you get stuck in a meme type play or something where it's just rocket ship parabolic, that strangle strategy can really bite you. And much like you're saying, hey, my momentum strategy works great when there's momentum. Doesn't matter if the momentum's up or the momentum's down, but when there's not a lot of momentum, it's not so interesting. And I think that's kind of where you got to know when you're reaching into your toolbox, what you're reaching in there for.
Yeah, absolutely. And so I've been passing the time with exploring, getting back to just swing trading. And so what I've discovered there, because this is absolutely no secret to the show for years, is while I do really, really enjoy and connect with the momentum skew strategy, some of the other option strategies I've talked about, the daily SPY trade, things like that. So those have been great, but there's always been this nagging of like, something's not clicking on my specific strategy. So while I was putting those other strategies on the shelf for a minute, I wanted to get back into swing trading. And so I started just, going back to price action, all the things we've talked about before. And I kind of came across a realization, I guess we'll call it, of what is working for me. And so it's really hard to explain where I'm about to go. And so I get that, and I don't expect a lot of people to understand it. So above all I want to impress upon you is just the idea that when you're doing something that is like all the books say it and all the this and that like if it's not working, like, I mean, you keep at it because there is a lot of discernment in learning it first and making it routine and whatnot. But there's also so much room for trading styles in the market is really my main point. And I feel like this really captures that. So what I discovered was as I was getting back into swing trading, I was still struggling with a very mechanical setup. And so we've talked about this before, and it's in discussions in the Discord all the time of a very mechanical swing trade setup is identifying levels, identifying price action levels, setting a limit order for when you want to enter a trade, set your stop, set your profit target, walk away, and the whole thing is defined and it's just going to play out as it is. And in theory, I love that strategy. It's, you know, it's like you package up a deal and you put it on the table and whatever happens, happens. So what I was noticing though, is I was still struggling with that structure, with that mechanical structure, because I was stressing the level, and I was stressing the rigidity to it. And that wasn't working for my particular style. And so I've also given a lot of thought and still thinking on whether that's me justifying bad behavior or if there's a real underlying source for this struggle. And so so over the past month and a half or so, you know, I've been swing trading, and usually in crypto because it's 24/7. And so it's very liquid. And so you can really test out different price action strategies and things like that. So I hit a string of really good trades. And what was most important to me, and so I'm just putting my thought process out loud, is I was able to identify criteria for how I took the trade, when I took the trade, and all that kind of stuff. And I was able to identify when I exited, when I took profits, and all that good stuff. So I want to make clear that there is a structure, a systematic framework to this. However, it was very in the moment. It was very watching the market play out, and evaluating the market behavior in real time. And that was just, it felt very natural to me. And so I continued, and this wasn't, you know, just trading one direction where, yeah, anybody can throw money in the market and you go up and you think you're a genius, because that's a very, very real risk that when something's working and you're making really good trades, you could think you're onto something, but really, yeah, you're onto a trend and you just keep trading in the trend. That's it. So this did involve shorts, it involved longs, scalps, all sorts of stuff, counter trend with the trend and all that kind of stuff. So it did have enough data to suggest something is here. However, when I was trading this, like I said, it was generally happening after market hours because I do still have a job that I can't stare at charts and whatnot. But the thing that was nagging at me is I was like, this is like against all convention because I'm just in the moment doing this thing, and not setting up a trade and just letting it play out. But what was most telling to me was the trade when the setup happened of the different criteria that I was watching for. And this is like volume patterns. And I would notice market maker fake outs where the price really climbs fast, but the volume isn't matching it. And so that is traditionally something of a market maker stop order hunt, where they see a big patch of stop orders or liquidations. And so they start pushing the price. And so it moves in a move that is out of sync with how much volume is happening. And so this is really easier to see on chain in crypto because some of that volume can be faked, absolutely, but depending on where you're looking, it's a lot harder to fake. And so I started to notice patterns like that of like, man, the price just jumped significantly, but the volume is just dead. I think this is a fake out. And so let's short it. And so I would short it. And then sure enough, within 15 or 20 minutes, boom, the floor drops out. And we're off to the races. So I was noticing, so it was things like that. So I don't want to give the impression of like, oh, I just show up and I just start doing stuff and it just works. Like there is a system, but it's not a rigid system. And so I was struggling with like, why is this a thing? So the beauty of AI, as I say, is I had a conversation and I explained everything to my LLM of choice. I explained everything in great detail because I had notes and I had, whatever, of thought processes, theses for the trade. And I was expecting, some sort of a textbook response of like, yeah, man, you're just messing around. And, this is, you need to get more structure in here. And what ended up discovering was like, this is a type of trade pattern, which we'll call it a discretionary breakout trader. And so, or just breakout trader. And the idea is the rigidity of a price action swing setup is just not my language, but a breakout move is my language. It's more exciting. It happens faster. You're in, you're out, you're done. And so as long as I'm not in my day-to-day job setup, if I'm outside of that, if I get pinged one of my alerts of like something might be happening and I can look at the chart, then it's boom, 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 and we're in and out and we're done and I move on. And so that worked for me and has been working for me. So I think the best way to sum it up is it's how my personality is a technical creative, as I would say. So I have the technical mindset and the price action and all of that, extremely important. But I also have this creative side that really doesn't like rules and structure, and it wants to. I always say I'm a cook, not a baker. I like to just kind of throw things in the pan and let's just cook something up in the moment. And the last thing that I realized is like it's how I approach my free weekends. I have a free weekend coming up and I have 10 things that I know I need to do. I don't want to plan it out ahead of time. I want to wake up Saturday morning and be like, I think I'm going to do this and then maybe this and this and this. And so it's really that where I have these things of like these rules. There are rules here, but they're discretionary rules. And so it's not rules that can be like, just set this order, set this order, set this order. Because when I would set those orders, I would stress the placement of them so much that I would miss by just a little bit. And I would either get stopped out and then it would run, or I would get missed and then it would run. And so this and refining and finding these breakouts was much more intuitive to me and appealed to my style of, all right, it's the time and just letting that order sit there that's bothering me to wait for the setup, because the price swings are very important and they do happen. But the time it can take is so unknown. That was not resonating with me. So getting into this pattern of breakout trading definitely has resonated and is definitely working thus far. So we'll see if that continues as always. But I thought it was interesting to bring up a very, very, very different strategy and perspective that probably doesn't resonate with a lot, but maybe it resonates with a couple of others of our 6 viewers. And above all, just shows how much space there is in the market for any style, any personality to find what's working for you.
Yeah, that is pretty interesting, Viper. Pretty much I hate it from my bones inside my body. But I actually can see a lot of the points that you're making. And I can see where that kind of fits in to your personality, your style. It's definitely not mine. It definitely doesn't fit. I have a day job. I don't dabble in crypto like you do, so it just doesn't fit that aspect. But all that aside, I am actually kind of curious a little bit to see how this plays out for you, because I think it's kind of like when you have a craftsman of some type of trade. Let's say they're building things, woodworking, stuff like that. There are things that you could write down, directions to follow. Cut the piece of wood at this dimension. Angle it up here, nail this here, screw this here. That any Joe Schmo can follow. And then there are kind of the craftsmen that have tinkered with the craft for a while, and they almost just more feel the way that something should be. You know what, I'm gonna go ahead and get the coping saw out for this, and I'm gonna go here, but you know what, I'm not gonna go exactly on this line. I'm gonna kind of go a little freestyle on it, and they can turn out amazing product and amazing things because it's just the nature of their craft, the nature of their approach. And what I hear you kind of saying is that freestyle approach is fitting more to your personality. But where my curiosity comes in, and this is what you'll have to reflect back on at a future date, is does some of that, has it been facilitated by your adherence to the underlying building blocks and the principles for which things are, which is what all of those rigid rules are based around, right? But they're kind of the rigid rules based around a one size fits all type strategy. It doesn't leave a lot of that creativity, but the fact that you spent time exploring that stuff, I'm more curious if you think that ends up putting you in a different state of mind and a different trading capability than if you just took some random guy off the street and said, yeah, you just got to feel this flow and look at this volume. And like, I feel like the underlying concepts you got more accustomed to by kind of looking at them through the rules of a rigid strategy. You saw how that kind of reacted, and then you're kind of giving a little bit of colorful flavor to it. And the reason I think that I kind of touch on that a little bit is I have my rules of entry of options and exits of options, but I have deviated a little bit on when I get assigned on whether or not I take assignment versus try to roll. And there is a little bit of flexibility that I've put in that's kind of a feeling or a read based on other signals that I can't quite quantify into a hard and fast rule. Now, I'm definitely not advocating, and I definitely don't do it to the extent that you were talking about, but I would be really curious if some of that stuff you feel you're in a better position now to kind of freestyle it a little bit versus before you spent a lot of time through rigid rules and understanding and all of that exposure.
Yeah. So I can tell you that I do not need to wait for months to reflect and answer that. I can say one bazillion percent yes, because that has certainly been those building blocks, that core structure, irreplaceable. Like which is why I wanted to be careful talking about this, because I'm like, I don't want to give the impression, like you said, that you could just come off the street, come in and be like, hey, yeah, that's cool, but I'm going to do that thing that just works. That's not a thing. And so to drive the point even harder, I would say it's a charter pilot and a stunt pilot, where you don't just go into airplanes and become and just immediately go to stunt pilot. But at the same time, a stunt pilot hears, well, you never fly a plane upside down, and they're like, no, you can, and then they do it. And so it's along those lines of like, no, that stunt pilot went through school. That stunt pilot took charter plane, that stunt pilot did all this other pilot stuff, and then was like, that's like, I get that. That's all real and cool, but this is really where I want to focus. And so I feel like it's along those lines. And because and directly to your point, the criteria that I have when I'm reading something in real time as it's happening is absolutely coming straight out of the playbook of price action. It's coming straight out of the playbook of levels. The thing is, instead of predicting what the price is going to do at some point in the future, which is setting those rigid orders, I'm just in the moment right now going, here's what I think it's going to do right now. And just as I've been exposed to that, noticing those volume patterns, noticing those different market maker moves or whale moves or whatever, and then just reacting to that in real time. So yeah, a bazillion percent, it doesn't happen, or it doesn't happen confidently with repeatable precision without all of those building blocks and those fundamental theories and structure for sure. Because I will always, as far as I can tell, until the last episode is recorded, I will say that price action and learning good structured price action is just the absolute best thing you could ever do for any strategy. We've heard it, how it applies to your option strategy. We know how it applies to trading. We know, I mean, it's if you can nail that, then you can open up and start to really get creative and confidently creative and discretionary, if you want. Or you can stick to the rules, and those are going to work too. Like we always say, there's a trader in the Discord that he's the rules guy, and he just sticks to it, and it works for him. He's the charter pilot, still tons of skill, incredible skill, but just a different vehicle.
Well, that certainly is good to hear, Viper, because that's really where my head was at. So I guess we'll have to come up with something else to do in the future, since you don't need any time to figure that out. But that brings us to the end of this week's episode. And really, it's just about kind of understanding what is that trading style that fits you. There are all different types of personalities out there. My personality is different than Viper's personality. Despite our similarities, we are very vastly different in how we approach many things. And it's then should be no surprise that the trading style at which we gravitate the most to or find the most comfort in is not the same trading style. Doesn't mean that one of us is right and one of us is wrong. There is just things that work for the different personalities, the interests, and it's kind of I'm a computer nerd guy, and they always have the what's your text editor of choice, VI or Emacs or Coke or Pepsi type of thing. And there's really not a right or a wrong answer. There's a right and wrong answer for a particular person, but not for the holistic population. And I think that is so true within the market. There are so many variations, there are so many approaches, there are so many underlyings, that what's really important is you find what best fits you, and you gravitate towards that, and you build your skill set in that, and you focus on the fundamentals, because really the capital markets are one of the only real paths to kind of building that generational wealth. And we've talked about that on past episodes. But you just can't step in and say, well, I'm going to follow this recipe book, and I'm going to be a master Michelin star chef at a restaurant because I followed this recipe. It doesn't work that way. You have to find what interests you. You have to find what drives you and what draws you into that, because that is where you're really going to separate yourself from other aspects of the market. And that is the most beautiful thing in the market, most amazing thing on the market, is it's such a big place. There's such an amount of room. There's a place for everybody to succeed and perform well. It just is up to that individual to go do that exploration on their own, find what fits them, go after it, sharpen the skill, hone it, and go to the gym with your reps again and again and again to get stronger and better. So hopefully you're finding out there, experimenting to find what is your trading style, how do you fit in there. Hopefully you're being met with success as you kind of go after it again and again and sharpen that skill. So good luck, have fun, and remember, think outside the block.